Here is the mental flaw that you're probably falling for as well. You think that you have to take on outsized risk in order to get outsized return. But I think that's wrong. You don't necessarily have to buy the shovels in order to dig the gold. You have to sell the shovels. Usually, outsized returns are generated where nobody is looking. Normally, it's on the second layer. For example, with the hype now in Korea. Everybody buys into the tech stocks in Korea. SK Hynix, Samsung, that has a lot of demand, but that also had a lot of risk. Now, instead of chasing the price appreciation, I just enabled other people to chase that price, as in there was very high funding rates on the perpetual futures to buy SK Hynix, for example. Now, I've talked about this in depth to the premium members while it happened. We made a lot of money with that. Now the funding rate has normalized, and so I can openly talk about this here on YouTube as well. But I want to discuss something fundamental here. This funding rate that we see over here, that comes without any price risk. So we can bet on a falling price, in this case of SK Hynix. We can take those annualized almost 400% of return. We can then go long, say on a brokerage account, we can buy the asset, and we can collect all of that funding rate without ever having to worry about the price movements. Most people don't do those trades because it seems complicated. And of course, it is more complex compared to just buying the asset, right? Now we've got different platforms going on. But that's, I think, the step that's required. We have to do the things that most people don't. Now let's have a look at what's actually going on in Korea. This here is the price of SK Hynix. A massive rally fueled by the boom in artificial intelligence. So chip makers get rewarded. And it's not just the price that went up, we actually had outperformance. This is now SK Hynix relative to the Korean stock market. I always like to look at relative performance because we want to see whether or not the additional risk that we take on is getting rewarded. Now there's also Samsung. Samsung had a very nice appreciation recently as well. Those are all long-term logarithmic charts, by the way, right? This starts in 1991 on a linear scale. This, of course, looks very much like a bubble. But in the end, we all are interested in percentage gains, not in absolute gains. And for the percentage gains, logarithmic charts are much more useful. Here we've got Samsung relative to the Kospi 200, and it didn't even outperform that much with the recent rally. It's at an all-time high, but relatively speaking, I don't think that Samsung has appreciated completely out of the norm. That's of course different for SK Hynix. People got crazy about the asset, and now the demand among the speculative investor has come down quite a bit, which doesn't mean it can never recover, right? But right now, the decline in price, so that's 40% from the all-time high, was enough to slow down excitement. But that then begs a bigger question. Should we actually focus on Asia? Should we focus on South Korea? Should we potentially find the next SK Hynix and the next Samsung? How are Korean stocks long-term trading versus, say, US stocks? Again, those are charts you probably will not see anywhere else. This here is the Korean stock market relative to the US stock market, adjusted for currency fluctuations. There are two potential stories here. One story is that maybe the two economies tend to expand at similar rates. The two stock markets should appreciate at the same rate over the decades, and that maybe Korea just is catching up recently, and it could potentially outperform by another 100% to get back to the long-term equilibrium. That's one way to look at it. Another way to look at it is that maybe Korea has a structural issue. For example, the birth rate is very low. Demographics aren't that favorable. And so maybe the Kospi will long-term underperform the S&P 500, as did the Nikkei in Japan, for example. I think that's actually the more likely scenario. We are seeing more and more capital flowing out of Korea, at least from local Koreans. So I think this might have been it. Of course, the volatility in those relative valuation charts is massive, right? This drop from here to here is minus 94%. I'm not saying that we have to see the same kind of drop again, but it very much looks like Korean stocks experienced massive hype with a lot of leverage and a lot of speculative capital. And now, with the example of SK Hynix, this might be slowing down. Here's the funding rate of Samsung over time. It's still positive, but it's fluctuating quite a bit. On a monthly basis, it looks a bit more stable, but still it tends to go down. In other words, crypto bros are not willing to pay that much more funding anymore to get exposure to the stock market in Korea. And that's, I think, a quite reliable indicator of how much short-term speculative demand there is. Because a lot of the crypto capital, that's just short-term speculation. Many markets right now seem overvalued. It's not just the Korean stock market. Even the tech market in the US is expensive. Gold also is seeing quite a bit of a run. I think the only risk-on asset, the only asset with a lot of upside potential that's not super expensive now, is Bitcoin. Bitcoin has come down 50% from the all-time high, and while it might not recover instantly, it's probably in a better position compared to most other stocks. And while it might not recover instantly, it's probably in a better position than most other assets now. Here, this is Bitcoin relative to gold. There are clearly diminishing returns, I'm not denying that, but we're definitely at the lower end of a trading range. Here is Bitcoin relative to the Nasdaq 100, so technology stocks in the US. A very similar picture, and we are rather low on the trading range. Here is Bitcoin relative to Korean stocks. It doesn't matter at what relative valuation we look at, Bitcoin seems to be comparatively cheap. And so that's the hard part about investing, right? We have to be contrarian. If we go with the momentum, we have to be very quick, we enter quickly, we exit quickly. If we don't go with the masses, then we have to be contrarian. We have to buy the thing most people don't want to buy. And Bitcoin is definitely that asset right now. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. If you want to see what kind of investments I do, how I do interest rate arbitrage, etc. If you want to get access to the platform with those arbitrage numbers, then feel free to check out the premium membership that pops up here on the screen. There's also a 7-day money back guarantee. In case you don't like premium, just message me within the first 7 days and I'll refund you. No questions asked. See you next time. Cheers.